Today, we saw the stock market crashing lower and we saw the bears lurking around. Is this the beginning of a stock market crash, or is this nothing more than a buying opportunity? We come over and look at how the indices fared across the board. The Dow was down 496 points. The NASDAQ was down 405 points. The S&P 500 was down 75.72 points, and the Russell 2000 was down 7.32 points. Now, we look at advancing issues versus declining. Declining issues, we had 78.1 of issues declining on the day, and it's no wonder that the stock market was selling off. After the bell, we're going to get hit with some big earnings. We have Amazon, Apple, Intel, just to name a few. Is this going to accelerate the selling after hours? We look right here at this article right here. Today, we had a lot of news come out. And what do we see? All right. Hershey's company revenues, yikes, a big miss out here. And we couple that with the fact that the jobless claims today jumped to nearly one-year high at 249,000, but it's not as bad as it looks. Well, I don't know what market they're looking at, because when I look at the overall stock market, this looks absolutely horrible. When you come over and look at the futures markets, look at these 4-hour candles, massive moves on the way down. One single candle unwound several hours of trading out here from yesterday. And look right where we came to. We came right to our structure breakdown point, rejected and came back down. Now, today I was looking for the market to potentially firm up around this area, but you know what? The market said, nah, not right now. Now we look at after the bell, Amazon came out with earnings, yikes, down another 6.43%. So I guess it's not looking so hot out there with Amazon being down substantially after hours. If we look at Amazon out here on the daily chart, you can see, we zoom this out, the blue line is representing where Amazon is trading after hours. Is Apple also going to come cratering lower after they report their earnings? We can see Intel is down 10.6% after hours. Yikes, another big miss. INTC, look at Intel. Yikes, looks similar to Amazon. Intel is now trading as low as $25 per share. And if we zoom this out, is this a buying opportunity? If we go back and look, this is near the lows that we saw back in 2022. Now, we got to be very mindful out here as the volatility has picked up drastically in the markets. We look at the volatility index up 13.8%, and it is off the highs. Now, normally when the VIX closes plus or minus 10% of the day, we expect an adverse reaction within the next 1 to 2 days. So that could be Friday or it could be Monday. And what would be so important about tomorrow? Well, for tomorrow, if we came over and we look at this right here, we have the average hourly earnings. We have the non-farm employment change. We have the unemployment rate. Are we going to get another hot reading tomorrow? Or are they simply going to pull the rug and Friday is going to be a simple bloodbath in the markets? Now, this article right here, stock market bulls are dangerously close to losing control to the bears. Now, let me know in the comment section down below, do you guys think the bears are starting to take control of this market? We come over, we look at the dollar index out here today. What do we see? Dollar index trying to lift up higher. Then we look at 10-year yield falling off a cliff. Now, normally when the yield is falling, what does that mean? That is usually favorable for the market, but are the yields falling for the wrong reasons? And what I mean by that is, are people trying to flee into safety now? Because as we look at the fear and greed index, we see the pendulum has swung back over into fear territory, reading of 39. We look at the Vista Sentiment Survey, the bullish reading was 44.9. But if we look, the real jump was out here in terms of neutral. We went from 25.1 to now 29.9. Now, we have a lot of things that we have to concern ourselves with. Slump goes on. Manufacturing contracts for the 4th month in a row. ISM finds. And didn't Jay Powell tell us, well, we don't see any evidence that we're going to have any type of hard landing. Then why are we seeing so much contraction? Why are we seeing the jobless claims on the rise? Let's not forget, we still have to contend with Israel and all that stuff going on in the Middle East. The last time Israel went on the offensive during that live stream at night, if you guys were on there, it was not a fun night for me. Thankfully, everything worked out, but there was definitely some excitement in that. And with that being said, I want to remind you guys, I stream live Monday through Thursday at 8:45 p.m. So if you'd like to join me, make sure you are subscribed and you have the bell notifications turned on for all. Now, as we come over real quick, and let's take a look at some of the indices real quick. We're going to start off looking at the small caps. Russell 2000 down 3.23%. And I warned you guys about this candle yesterday. I said this is a very bearish candle, especially given the location. A big selling tail on top. We overthrew the recent high. And then today we got the confirmation on the way down. Then we look at the diamonds. Diamonds had a very similar candle as well. where we had that shooting star candle right into our resistance zone. Then today we get confirmation, but at the end of the day, look what we get. We get a little bit of buy-in on the bottom of that candle. So will the news be good enough tomorrow? And will some of the earnings coming out be enough to lift the markets up a bit higher out here in the short term? Because as we come over and look at the QQQs, notice 1, 2, now we're forming a triple bottom pattern. And the question is, will the bottom hold? MACD indicator is down below the zero line, and it looks like it's trying to firm up. It's just not there yet. On the 4-hour chart, we did get a fresh cross as of yesterday, but today we're right back down in that same area. On the 1-hour chart, you can see we have huge MACD divergence, but look, this morning I asked the question, will we fill the gap above us or the gap below us? We came all the way down, filling the gap below us. Now the question is that good enough? Or are we going to try to flush the lows one more time to see if there's any stops sitting below this level and then potentially try to stage a rally on the way up? I want to make everybody aware, Apex 7 a massive 80% sale off all their valuation accounts, passing as little as 1 day. And you can also get a 150K account for only $40. You get a 250K account for only $40. And you get a 300K account for only $40. So if you want to take advantage of this offer, use the link in the description box down below and use the promo code Mike at checkout. Today, look at the 30-minute volume profile charts. What did I say this morning? I said if we get back below the high from yesterday, we can target value area high, point of control, value area low, gap support, our zone down here, and then all the way for the gap to be filled. Now, if you guys follow the volume profile principles I laid out in this morning's video, pat yourself on the back. Hopefully you had a very good day out there trading. Now, as we come over and look at the futures markets, what do we have? Well, we have that kind of triple bottom-ish looking pattern, and we've already come all the way up towards our structure breakdown point. Boom, we rejected right back down. Now we got to ask ourselves, is there a way we can make it back up, maybe back up towards the minus development area or even the point of control on the weekly chart? Right now, we are currently trading below last week's value area low. So from a weekly perspective, we're in a sell side situation. Then out here on the daily charts, look at this selling today. Just sell, 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 sell. Oh, we get a little bit of a lift on the way back up. We had an 848 point range today. That is absolutely massive. That is a crazy range out here for 1 day. And if you look, all the volume for today was really built near the upper part of the range. So will we see the market starting to lift back up there tomorrow after we see some of the news? Now the MO, if we do close below value area low at 19,078.50, you guys probably know what I'm already thinking. Yes, I'm going to be targeting that area. I'm going to be looking for a retest of value area low, and we'll see if it works out or not. Now, anything above value area low, I would then want to play some of these high distribution areas on the profile as we try to work our way up towards what will be an untested point of control. And then we have value area high all the way up here at 19,706. I don't see the case where we're going to undo today's entire move on a Friday, but who knows, crazier things have happened. Then as we come over and look at the SPY, if we go ahead and look left, look what we did. We went ahead, we closed the gap. Now the question is, are we going to continue to go lower and potentially set up a much larger ABC pattern to the downside? And if we draw that out, that would be the A to B leg, the B to C leg. That gives us a price completion at about 526.92. Notice, where does that complete at? Right near the high volume area on the composite profile as well. Then we measure from the high down towards the termination of that pattern. That would be about 6.7% drop for the S&P 500. Out here on the 4-hour chart, massive red candle today. Then we close with a hammer candle. Is that going to be enough to lift the markets tomorrow? And if so, I want to pay attention to this high volume area on the composite profile. If we can get to the other side of it, then I think we have a shot of running a little bit higher. Out here on the 1-hour chart, what do we see? MACD indicator is back down below the zero line, bearish separation of the lines. But then as we look on the 30-minute chart, we're way below the zero line, and it looks like the MACD indicator is trying to base out or at least firm up a bit. We'll see if we get confirmation of that tomorrow. Now, when we look at this, I'm going to classify today's profile as a B as in boy. If we can get above value area high, that would suggest that we can go ahead and auction back up to the upper third of the range. And more importantly, I'd kind of focus on this distribution area right up here, the minus development area at about 551.84. Now, in my eyes right now, looking at the markets, I feel like this is a long shot. But who knows? Crazier things have happened. Yesterday, I said we had a P as in Paul shaped profile. And if we broke value area low, then it really increased the odds that we're going to explore the lower third of the range, which was roughly right at this, this area we had marked off. And we went substantially lower from that point. So tomorrow is a new day. So let's not rule out the possibilities. Now, when we come over here and look at the S&P 500 futures markets, crazy move on the way down, absolutely insane. But if you look, we just barely missed filling the gap right over here. And then boom, they yanked it right back down. Now, if we do start to get a lift in the markets tomorrow, I want to focus on this high volume area along with the high volume area over here. Those price points are going to be 55.05 to about 55.31. However, if we cannot get above the daily volume profile levels, then there's no need to really worry about those areas. And one thing I want to pay attention to is one, we want to go ahead and pull a Fibonacci retracement from the swing high all the way down here to today's swing low. Now, if we do break the low after hours or tonight, we'll have to adjust this Fibonacci retracement. But keep in mind, the S&P loves to retrace a 50% retracement, which would bring us all the way up here at 55.22. Right now, we are currently trading above value area low, which comes in at 54.45.75. The point of control is right here at 54.72.50, and value area high is all the way up here at 55.37.75. Now, here's what I'm going to say. One, I would prefer to see a flush of the lows tonight, and then we start to rally back up. However, if we can stay above value area low, I am going to lean a little bit more on the buy side of the market, only given the fact that today's range was 156 points. I said yesterday, I expected a D-shaped profile. Probe a little bit higher, probe a little bit lower. I did not anticipate the drastic move that we got today. I did not think we would unwind the entire move from yesterday, but this is not uncommon to see big moves up, big moves down near bottoms or tops in the market. And we'll see if indeed tomorrow can provide a little bit of a relief rally out here. Now, if you guys want to learn how to trade double bottoms using order flow, watch this video right here.